My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends, just trying to make you some money. My job is not just to entertain, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. We have a serious public health problem on our hands. More than 20 million cases, 210,000 hospitalizations now, more than 12,000 deaths. And it's not over. The disease is still raging. Don't let anyone tell you otherwise. The numbers are staggering, much worse than we thought. Except I'm not talking about the coronavirus. I'm talking about the regular old seasonal flu we are having here in the U.S. Even with the flu shot, it's been incredibly rough. Yet nobody's freaking out over this influenza outbreak. Maybe they should. See, the comparisons are starting to dawn on people. China may have the equivalent of a really bad flu bug. Throw in the fact that the frontrunner for the Democratic nomination is a guy who Wall Street believes is completely unelectable. And you know what? Out of nowhere, you got a recipe for a terrific run. And that is why the Dow surged 275 points today. S&P gained 0.65%. And the Nasdaq jumped 0.90%. I know today seemed ridiculously euphoric, but I know never to quibble with a rally. Stock prices are up. You can sell any stock tomorrow that's up. You can take that money to the bank. No teller's going to say, sorry, that was made off of euphoria, and we can't take your money. But we have to ask ourselves, is all this positivity truly justified, and justified longer term? So what we do is we have to tackle the issues head on so that we don't just say, you know what, I'm going to get caught up in this because everything's clear in China and we're in great shape. First, we have to ask, is the coronavirus outbreak under control? I'd say no. I'd use the word volatile. The situation is still volatile. While the virus appears to be plateauing in China, it's still popping up pretty much everywhere else except for here. Our quarantine surprisingly is working. The experts didn't think it would, but it is. They usually don't work. And even as things remain dynamic, the danger in China seems to be abating. That is, if you study any of the numbers that the Chinese give out, there's a lot of different ratios. All the ratios seem to indicate that things are getting better. But you know what? They're getting better. Wall Street's not happy with that. Wall Street likes to get ahead of the story. Wall Street's acting as if it's done. It's plus scanning company that spells out its China losses, from Carnival with its highly visible duo of plague ships, PVH and Nike. When you see Carnival stock up 2.6% today on the possibility of a big but quantifiable chunk of earnings going away, well, you know this market is driven by hope. I'm not saying it's smoking opium. It's driven by hope. The Carnival company has two ships in the coronavirus crosshairs. There's the Diamond Princess with 3,600 people on board. It's under the care of the Japanese. Although, you know what? I think care is a very generous word here. I think it's time that someone called him out. According to the New York Times, only 439 of the people had been tested on that ship as of yesterday, and 174 of them are infected. Well, then there's the second ship. It's called the Westerdam. It's a Holland American line. There's no virus, yet it had to stop at 5 ports before Cambodia agreed to take them in. That all sounds pretty bad. Who the heck would take a cruise right now with the virus sweeping through the cabins? Well, Carnival said it could lose 55 to 65 cents from the outbreak this morning. And while that's not great, it's really a lot, I'd say a lot less harsh than many of us were expecting, meaning plenty of people are still willing to go on cruises. More important, the fallout has been quantified, which is why Wall Street's reaching for this stock. And it is. It's like the stock got blessed today. Still, if things stay the same, I'll bet you'll start hearing that the U.S. flu is much worse than the coronavirus. You'll hear about the things that I said at the top of this. The only difference is that we're used to the flu, so we don't talk about it endlessly. It's not novel, but that doesn't make it any less deadly. Their flu is novel. Our flu is garden variety, except for if you get it. Given that this is a crucial week, the first week back from vacation in China, we should presume that more and more factories will go back online pretty much every day. While Chinese GDP may be greatly reduced, if you believe the situation is stable, then there's still plenty to buy. Now, I thought about Apple all day. I think Apple can still go up more. Micron's not done going up. Applied Materials, terrific number this very evening. Skyworks is probably the biggest lever to China. Broadcom is one that I've taken a particular interest in. And then my Travel Trust owns Starbucks. Remember, they reported a fabulous quarter recently, but Kevin Johnson, the CEO, couldn't give a forecast because of its big China exposure. I really like the stock of Starbucks because they're solving that airport line problem, excuse me, that I just talked about the other day. It was something that Jimmy Chill had as a campaign online, and it looks like we've gotten somewhere. So I think that Starbucks really, really works. Bank of America they like the casinos. They recommended a Macau Wynn and Las Vegas Sands. Now, I got to tell you, I think they're stretching that one. I wouldn't pick up a pair of dice after they've been blown on at the craps tables. Or touch a cell phone that's right there at the craps tables. I wouldn't do that either. Now, how about our election in New Hampshire? Where does that figure into this market? All right, Bernie wins. Mayor Pete comes in second. Klobuchar third. You know what that is? That's just enough disarray to make Wall Street more confident of a Trump victory. And so I always say, hate him or like him. I mean, this guy, he is fabulous for the stock market, which he regards as his presidential Nielsen ratings. Plus, prominent Wall Streeters are openly scornful of Bernie. My friend Lloyd Blankfein, former CEO of Goldman, expressed the thesis straight up with this now legendary tweet from last night. Quote, if Dems go on to nominate Sanders, the Russians will have to reconsider who to work for to best screw up the U.S. Sanders is just as polarizing as Trump, and he'll ruin our economy, and doesn't care about our military. If I'm Russian, I go with Sanders this time around, end quote. Wow. Whoa. That sums up the prevailing view on Wall Street, though. They're confident Sanders is going to lose if he's the nominee. Bernie's openly loathed by wealthy, and he welcomes their hatred, of course. He's betting a class war will be a good campaign strategy. That's really what he's about, is class warfare. You might think that makes sense. There aren't a lot of billionaires, right, or even multimillionaires. But their money speaks loudly, as we saw with President Trump and beginning to see again with former Mayor Mike Bloomberg. Look, I think it's a mistake to get too confident about election predictions. Last time, Wall Street was pretty convinced that Hillary had it locked up, right? But it's fair to say that Bernie's got an uphill battle, and the market's not a believer in this guy. Bernie went single payer, which would put the insurance companies out of business. So why the heck were the stocks of United Health, Humana, and Centene the biggest gainers, among the biggest gainers? Because we have Shopify. That was a huge gainer. They're on later in the show. You see, if you think there's no chance of a Sanders administration in 2021, you want to buy CVS, that's Charlie Victor, which owns Aetna and was down today after reporting a quarter that was very good, but not good enough given how much the stock had run ahead of the print. Terrific interview on Closing Bell with Sarah and Scott and Larry Merlot today. Made me feel like the stocks can go to 76, 78, where it would be more fairly valued. One thing this market does not lack is confidence. There's confidence that the Chinese have this virus under control. There's confidence that their factories will all reopen. There's confidence that tourism will bounce right back. There's confidence that investors will see through the weak corona quarter and buy now because there's been so much stimulus in China. There's confidence that there will be a vaccine within the next few months. And there's amazing confidence that President Trump will be reelected because the Democratic Party seems divided and will likely stay divided regardless of who wins the nomination. If all of this pans out, it's good news for the stock market. But will it? The bottom line is, I don't know. But I have one conclusion. If you haven't gotten your darn flu shot already, do it. Unlike the coronavirus patients in China, most of the people who have been hospitalized for the flu here, and many who have died, would have been just fine if they had gotten that one injection. Even in February, that's worth investing in. Akshay in California. Akshay.
Hey, Jim. Booyah. First of all, belated happy birthday to you.
Oh, well, thank you.
First-time caller, but long-time follower, and thanks for all your devotion to help us get a deeper understanding of the markets. Really thankful for all you do.
You're terrific. Thank you. Great way to start the show. Thank you very much.
Of course. Oh, likewise. My question for you is that I bought into Dropbox when it IPO'd at 30-something, and since then it's just been hemorrhaging money. Should I still hold on to it?
There's a man. He's in Seattle. His name is Satya Nadella. And he doesn't like Dropbox. He runs Microsoft. It's a powerful enemy. Drop Dropbox. Jay in Florida, Jay. Jay.
Booyah, Jim.
Jay, good to have you. Thought for a moment there that maybe I lost you. What's up?
I'm here.
All right, me too. What's going on?
Thank you so much for everything that you do. My question is about Verizon. I know that it's one of your favorite stocks. Do you still recommend it based on now T-Mobile and Sprint merger?
Look, I mean, I think that raises a really good question. I always see Bobby a couple times a week, my buddy uptown, and he says, do you stick with the Verizon? And I always say, stick with Verizon. And I'm not changed by this. Look, everyone thinks that T-Mobile's going to be perfect with Sprint. I say you stick with Verizon and stick with Cramer. There are plenty of things in flux right now. But this stock market, it does not lock for confidence. Is the positivity justified? Time will tell. But in the interim, Wall Street's getting ahead of the story. Mad Money tonight. Shopify is soaring after earnings. But is there still time to stop and shop at the company? Or has the move been made? You'll hear my exclusive. Then, not 2, but 3 analysts enter. Only 1 leaves. Don't miss an epic smackdown over the fate of Canada Goose. And Valentine's Day is Friday. Got your gift yet? I did. I've got the company that might be able to help. Do not miss my sit down with Signet. It's not too late to buy something. And stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.